Let's begin here by taking a look at some market structure basics. Market structure is basically the analysis of how the market has moved in the past to predict how the market will move in the future. And the first thing we have to learn here is that the market can be in 3 states. The first market state is the uptrend. And we know that the market is in an uptrend if the market consistently breaks higher highs while at the same time prints higher lows. So if you take a look right here, we can see an example of an uptrend. You can see that the market here is both printing consecutive higher highs while at the same time printing consecutive higher lows. As long as the market keeps on printing higher highs and higher lows, we are in an uptrend. And very soon we will dive deeper into analyzing uptrends, but so far this is all you need to know. The next state the market can be in is a downtrend, and this is basically the opposite of the uptrend. So in order to have a downtrend, the market needs to consistently break to lower lows while at the same time staying above the highs. So right here we have an example of a downtrend. As you can see, this market prints consecutive lower highs while at the same time printing consecutive lower lows. And the final state a market can be in is a sideways market, or in other words, a trading range. And a trading range is very simple. That is a market that moves sideways without a clear uptrend or downtrend. So right here we have an example of a sideways market. You can see in this case we have the highs here at the same level and the lows at the same level. But a sideways market can also be a market that looks something like this. For example, right here you can see that the market is printing higher highs, but it's also printing a lower low. And then it prints a lower highs and lows here at around the same level. So a trading range doesn't have to be perfectly straight with highs and lows at the same level. It can basically be any kind of market that are not in a clear uptrend or downtrend. And now let's take a look at the uptrend, downtrend and sideways market a bit more in detail. Because this image I just recently showed you guys is actually a bit flawed. And let's begin here by analyzing the uptrend. Remember from earlier that in order to have an uptrend, we need to print higher highs and higher lows. And what we actually can see on this image is that we are printing a higher high right here, a higher high right here, but right here, this is yet another higher high. So the color of that circle should actually be a green one because we are still in an uptrend at this point. We can also see that we have a low, we have a higher low, but this right here is yet another higher low. So the market at this point in time is still in an uptrend. But now let's focus on this point right here. This is a very important point because this is the point where the market fails to break to a higher high. So at this point, we can consider that the market has entered a trading range. But one very important thing to consider about trading ranges is that trading ranges are actually very important to exist within uptrends. So it's very possible that we see an uptrend right here. Then for a short while, we see a trading range. We can call this a consolidation or a pullback. This right here is actually often just a pause in the uptrend. And many times after the trading range, the trend will continue in the same direction. Now, last but not least, let's consider when this market has actually entered a downtrend. Well, the first important signal actually comes when the price breaks below this point right here. Because when the price breaks below this point, we will for sure print another lower low. And this break right here is very important, and we will talk about that later on in this course. But for now, we just need to realize that when the price breaks below this point, we will for certain print a lower low. But remember here that in order to have a downtrend, we need to have both lower highs and lower lows. So it's not until we print this high right here that we actually have 2 lower highs and 2 lower lows. So it's basically at this point, the real sort of trend is confirmed. Alright, so now when you know the basics about uptrends, downtrends and sideways markets, now we are finally ready to take a look at change of character or CHoCH and break of structure or BOS. And let's begin here by taking a look at break of structure. A break of structure occurs when the price breaks a higher high within an uptrend or a lower low within a downtrend. So for example, right here, you can see that this market is in an uptrend. And when the price pushes above this point right here, so at this point right here, the price breaks to a new high within an uptrend, and therefore this is a break of structure, or for short BOS. When we're talking about break of structures in uptrend, we can call this a bullish break of structure. And the same thing actually happens right here. You can see at this point, the price breaks to yet another higher high. So here we have yet another break of structure. But now, as you can see right here, this high actually never got broken. So we saw no more breaks of structure in this uptrend. Instead, let's focus on this low right here. When the price pushes below the most recent low in an uptrend, we call this a change of character, or for short CHoCH. And as we can hear on the name, a change of character basically means that the character of the price, which is currently in an uptrend, is changing. So a change of character is a first warning sign that the trend might be coming to an end. And now, as an exercise, I want you guys to try to find the first bearish break of structure on your own. So if you want to, feel free to pause the video right now and try to find the first bearish break of structure. Did you find it? Well, remember what a break of structure is. It's when we break highs in an uptrend or lows in a downtrend. And where in this downtrend did we break the first low? Well, we can see that the first low of the downtrend is right here. Remember that when we broke this low, this was actually a low in an uptrend, but the first break of a low in a downtrend was from this low, and it confirmed right here. So here we have the first bearish break of structure. The next bearish break of structure can be found right here. You can see at this point we broke to yet another low, so this right here is yet another bearish break of structure. But now then, what about this whole part right here? Here it gets a little bit complicated. But what we first can notice here is that when the price breaks this point right here, we actually have a change of character, right? Because in order to have a downtrend, we need to print lower highs and lower lows. And when we break this point right here, we are no longer printing lower highs. But the next move right here is more complicated, because you can see at this point, the price actually breaks to yet another low. Some traders will consider this yet another immediate change of character. And when we see two change of characters happening sort of immediately after each other, you can see here we have both higher highs and lower lows. At this point, we no longer consider the trend to be either in an uptrend or a downtrend anymore. And remember what that market state is called. It's called a sideways market or a trading range. So now let's dive a little bit deeper and take a look at something called internal and external break of structure and change of character. And here on the screen we have two different time frames. The black line right here is the high time frame. So it could, for example, be a daily chart, or in other words, that every candlestick represents one day, while the red line right here is the low time frame. So this might, for example, be a 1 hour chart. And what's important to understand here is that change of character and break of structures are fractal, meaning that they appear on all time frames. And the break of structures and change of characters that happens on the high time frame, we usually call external break of structures. So for example, right here, you can see that we have a break of structure because the price breaks to a higher high. And since this happens on the high time frame, we can write E for external and then break of structure. Right here, we have yet another external break of structure, right? And for example, right here, we're seeing a change of character because the uptrend can no longer maintain higher lows. So we write an E for external and then change of character like this. But now, and this is very important, we also of course have break of structures and change of characters on the lower time frame as well. You can for example see that right here the low time frame breaks to a new high. So this is an internal, so I, break of structure. Here we have another internal break of structure, and here we have another one. But what happens here? Well, at this point we can see that the low time frame can no longer maintain the uptrend. So here we have an internal change of character. And this internal change of character is the beginning of a short downtrend on the lower time frame. So one thing that you quickly will notice here is that upwards movements on the higher time frame will usually be large uptrends on the lower time frame. And moves that goes against the direction of the trend, like right here, will usually also be small trends on the lower time frame. And this process can go on and on and on. So let's for example imagine that we zoom in on this red move right here. If we zoom in even further, we will notice that this will actually look like a large trend on the even lower time frames. And we as traders can use multiple time frames at the same time to get better entries and exits in the market, and as a result take better trades. Alright, so now when we have a deep understanding of change of character and break of structure, we are ready to take a look at yet another important market structure concept, and that is strong and weak levels. And this concept is something we will use throughout the whole course, so make sure to really pay attention now. The basics of this concept is very simple. A strong level is a level that comes from a move that breaks structure. And a weak level comes from a move that fails to break structure. So in order to find our strong and weak levels, we simply need to analyze the break of structure and change of character. And by this point, you already know how to do this. So for example, right here, we have a break of structure, right? And a strong level is a level that comes from the move that breaks structure. So what we need to look out for here is the beginning of the move that broke structure. And as we can see right here, this was the beginning of the move that broke structure. So this right here is a strong level. But what about this move right here? In order for this move to be strong, we actually need to break the previous low that is all the way down here. So this right here is a move that fails to break structure, or in other words, this is a weak level. And some traders will also call this right here a strong low because it comes from a low, and they will call this right here a weak high because this right here is a high. And for the same reason, this right here is yet another strong level or strong low because this move broke the previous high. And here we have another weak level because in order for this level to be strong, this move needs to push below this low right here. But what about this move then? Well, this right here is actually a strong level or a strong high. And why is this a strong high? Well, this move breaks the previous low. Remember, this right here is a change of character. And I see both levels that break structures and levels that break characters as strong levels. For the same reason, this right here is a strong high because it breaks the low. And this right here is a weak low or weak level because it fails to break above this point. And now you might of course wonder, why do we learn about strong and weak levels? Well, that will be very clear in the next chapter where we talk about. Alright, so this video was actually just a short clip from our full smart money trading course right here on YouTube. To watch the full course, simply click or tap on the screen right here. I hope I will see you all over there very, very soon.